So trading is 90% psychology, right? Wrong. I'm going to explain to you why that is not the case. Although it's important, no one wants to be stressed, chasing losses, dealing with fear, dealing with greed, all of those things. And you've probably seen on social media things like this, you know, 90%, 10%. So we've got strategy and psychology, right? We've all seen these things, okay? But the important thing to understand is that how you feel, whether we're happy, stress-free, or if we're angry, depressed, overwhelmed, has a direct correlation to your actual trading strategy. So this is really important. So it's 90% psychology, but how you feel directly correlates to the way you trade anyway. So let's look at some factors. So the things that will affect your trading psychology, excuse my language, or how you feel. So let's look at stress. Let's look at overwhelm. Let's look at revenge trading, chasing losses, not detaching. So you're in fear of trades losing, getting it wrong, all of these things. So basically, your trading psychology can be really shit, okay? But ultimately, all of this stuff can be completely eradicated with how you actually choose to trade anyway. Let's look at your actual strategy. So your strategy should cover your entry, your exit. So if that's crystal clear, there's not going to be overwhelm, right? You could reduce the amount of pairs you trade. Might be 1 or 2. Again, reducing overwhelm and stress. If part of your strategy, you've got razor sharp risk management that's been geared around a maximal drawdown and a losing streak, then again, you're going to be less stressed. If you've got the data from your strategy, which you should have, you should know the wins, the losses, and then what you need to plan for. Okay, lots of things like this, and pairs, entry, exit, risk management, the data, the back testing, all of this in turn is going to give you the confidence and belief to carry on. Okay, so when you do the work on your strategy, like we've just said, a clear entry exit plan, risk management, planning for probability, keeping it simple, 1 or 2 pairs, for example. I've gone through risk management. That all goes into how you feel. Let's look at 2 traders. I'm going to call one Bob and one Pete. Yeah. So Pete's not got this yet. Pete's got a £1,000 account. Been trading for a while, hopping from signal group to signal group, blaming losing streaks. This guy is stressed, not sleeping, chasing the big gains, has no strategy, is opening MetaTrader up or TradingView, guessing where the markets are going, or is following a signals group with no data or history of trading them, doesn't understand how they're trading or the numbers behind it. So there's no back testing. If we ask Pete what the biggest losing streak has seen for the last 2 years is, he won't know, right? On his £1,000, is he risking a fixed amount per trade? No. What is he doing? He's probably trading 0.2, 0.3. If he has some losses, he's going to be chasing losses. He will then probably blow up with a 1-lot trade and then end up losing his account. Okay? This is a problem. And also, let's look at how he is in other areas of his life. He's stressed, not present, angry, depressed, not sleeping, is looking at losing trades, losing money. He's not sleeping very well. All of these things are a big problem that have knock-on effects to other areas of your life. And ultimately, he gets his paycheck on the 28th of the month and he's constantly redepositing into his trading account. Okay. Whole point of trading surely to withdraw cash, not having to keep putting more in. The problem with Pete is he's been there before. He's been there before. He keeps doing it. Losses, hops around and continues to make the same mistakes. Pete thinks the markets are against him. He's unlucky. There's scammers everywhere, blah, 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 blah. All the same shit that you hear. Ultimately, he's not done the work. He's practicing the wrong thing. Practice makes permanent. It's the wrong practice. He's not trading in the right way. He has no edge on the market. He has no confidence and belief in his strategy because he's not got any data to back anything up. Let's compare him to Bob. Bob's a cool guy. He's super chilled, not stressed, detached from his trade outcomes. Bob's got £1,000 account too. Bob has a strategy. He has a shitload of data on it. He knows in detail what the maximum losing streak he's seen before is. Yeah. He knows the equity curve. He's got realistic expectations. Whereas Pete, fucking hell, he's trying to flip his £1,000 account every month. This is the problem. Yeah. Key part of the realistic expectations. So what Bob's done is he's got his £1,000 account. He's planned his maximal drawdown of, let's say, 25%. So he's willing to risk 250 quid on his trading strategies. He runs two, so he splits the pot, 125 per strategy. He knows that on one of his strategies, it's got a 50% win rate. Probability dictates he could probably see a losing run at any one time of between 8 and 9 trades. That's just math. It's probability. Whereas Pete, after losing trade 2, 3, or 4, he's blown his account. He's chased that loss and blown the pot. Whereas Bob knows that's trading, knows its probability, and he's planned for it, right? And that means if he's risking 125, he's probably trading, I don't know, I'm guessing, but it might be around 0.3 to 0.5% per trade. But Pete doesn't know what he's risking. He's just going in with a fixed lot, yeah? So ultimately, this is what I'm trying to say. Psychology plays a massive part, but you either trade like Pete or you either trade like Bob. It's all down to your strategy, the data, the confidence, the belief, the data to plan, your risk management. All of that stuff feeds in to how you feel when you're trading. Same with greed. If you've got the data, you know what you're willing to risk, you reverse engineer how you want to feel, what true amount of money you want to risk. That then in turn is going to give you what your equity curve from the past and the data you've got looks like. Yeah. So all of these things are important. It's not 90% psychology. It's how you're trading that's the problem. Let me know if this resonates with you in the comments or drop me a DM. Thanks for watching.